Good morning everyone, this is Aishka Joshi here to present you a presentation about basic principle accounting as an assignment of our finance subject. Starting off with accounting. What is accounting? Accounting is similar to maintaining a financial journal, keeping a record of each amount one earns such as pay and every amount one spends such as on food and bills. This makes it easier to track expenses and remaining funds. Whether it's a company, organization, or a person's personal affairs, accounting is a vital tool for managing money and assessing the financial position of an entity. Accounting process. First we identify transaction, then we prepare journal entries which we eventually post into ledger, then prepare unadjusted trial balance, then adjust it, then we prepare financial statements such as income statement, balance sheet, then we close off. Double entry bookkeeping system. Double entry bookkeeping system is recording financial transaction which impacts two sides. Every transaction in double entry accounting has equal amounts of debits and credits. The debits and credits will be equal. It is also a self-balancing method. Then we have T account. So T account is a tool used within a ledger to represent a specific account. Debits and credits are well represented visually. A T account is shaped like the letter T with the credit side on the right and the debit side on the left, where we can see an example of T account. Accounting equations. In any accounting equation, assets is equal to liabilities plus equity. Debits are always left and credits are always right. Debits increases assets, whereas credits increase liabilities and equity. Ledger. A ledger is a complete record of all financial transactions for a company. It keeps tracks of all the specifics of financial transaction. It is a detailed record book that contains all the individual financial transaction, which is the account for a business or individual. We can also see the format of a ledger. Trial balance. After the end of a period, we move all ledger balances into the trial balance to ensure that we are in balance. That means debit is equal to credit. Trial balance is an inventory of all accounts together with the recurring balances to ensure that everything adds up properly. When transactions are entered into accounting records, one account experiences an increase called debit, while the other experiences a decrease called credit. Trial balance format. We can see a format of trial balance where there is cash, capital, for drawings, purchases, sales, machinery, rent, salaries, purchase, return, and so on. It encompasses all assets, liabilities, and equity. Coming to balance sheet. Balance sheet is a financial snapshot of a company or individual at a specific moment in time. It has two sides, which is called assets and liabilities. Assets means your possessions such as cash in bank, real estate, or machinery equipments, whereas liabilities are the things that we owe, such as debit, bills, and loans. In balance sheet, assets is equal to liabilities plus equity. It is usually prepared at the close of an accounting period, such as month end, quarter end, or year end. We can see the format of balance sheet where we have liabilities and assets. Derivation of balance sheet through trial balance. The balance sheet takes the account balances from the trial balance and organizes them into a format that clearly displays what you own, that is assets, and what you owe, liabilities, and how much of what you own belongs to you, that is owner's equity. It's like rearranging the pieces of puzzle to get a clear picture of your financial position at a specific moment in time. We can see the relationship between trial balance and balance sheet here. The assets are the first cash, supplies, account receivable, equipment. In the trial balance, we can also see account payable, notes payable, which are listed in liability side of balance sheet, and then we have owner's capital in trial balance, which is then listed in the equity side of balance sheet. Thank you. These are some differences.